This conference call is now being broadcasted live over the Internet. Webcast replay will be available within 2 hours after the conference is finished. Please visit our website, www.umc.com, under the Investor Relations, Investors, Events section. Now, I would like to introduce Mr. David Wong, Investor Relations Manager of UMC. Mr. Wong, please begin.
Thank you, and welcome to UMC's conference call for the first quarter of 2026. I'm joined by Mr. Chi-Dong Liu, CFO of UMC, and Mr. Michael Lin, Senior Director of Finance. In a moment, we will hear our CFO present the first quarter financial results, followed by our key message to address UMC's focus and second quarter 2026 guidance. Once our CFO completes the remarks, there will be a Q&A session. UMC's quarterly financial reports are available at our website, www.umc.com, under the Investors Financials section. During this conference, we may make forward-looking statements based on management's current expectations and beliefs. These forward-looking statements are subject to a number of risks and uncertainties that could cause actual results to differ materially, including the risks that may be beyond the company's control. For a more detailed description of these risks and uncertainties, please refer to our recent and subsequent filings with the SEC and the ROC securities authorities. During this conference, you may view our financial presentation material, which is being broadcasted live through the Internet. I would now like to introduce UMC's CFO, Mr. Chi-Dong Liu, to discuss UMC's first quarter 2026 financial results.
Thank you, David. I'd like to go through the first quarter 2026 investor conference presentation material, which can be downloaded or viewed in real time from our website. Starting on page 4, the first quarter of 2026, consolidated revenue was 61.04 billion NT, with gross margin at 29.2%. Net income attributable to the stockholders of the parent was 16.17 billion NT, and the earnings per ordinary share were 1.29 NT dollar, which show pretty good growth compared to both last quarter as well as the same quarter of last year. On page 5, first starting from the sequential comparison, revenue was basically flat or down 1.2% sequentially to 61.4 billion NT. Gross margin at 29.2%, slightly declined from the previous quarter of 30.7%. Net income attributable to shareholder of the parent, though, has increased 60% sequentially to 15.17 billion, partially due to the strength of the stock market performance and the non-operating income grow 50% to 5.3 billion in the first quarter of 2026. EPS as a result reached 1.29. EPS per ADS is 0.204 in the first quarter of 26. On page 6, year-over-year comparison, revenue grew by 5.5% year-over-year, mainly due to shipment increase. In gross margin also show 2.5 percentage point improvement to 29.2%, to 17.8 billion NT in the first quarter of 26. And EPS also show nearly more than 100% growth in the net income compared to 7.7 billion in the first quarter of last year. On page 7, balance sheet highlights. Total equity reached 406 billion NT, and cash on hand still over 100 billion NT dollars at the end of first quarter of 26. On page 8, our ASP declined slightly in the first quarter of 26, mainly due to a better than expected 8-inch wafer shipment, which bring down the blended ASP. On page 9, our revenue breakdown by different geography. The change is very minor. We see some decline in Europe region from 11% in the previous quarter to 9% in this quarter. And the other region stay relatively similar compared to Q4 25. On page 10, IDM show a bigger decline from 20% in the previous quarter to now 14% of the total revenue. On page 11, communication also declined 3% quarter over quarter to 39%, when consumer increased by 4% to 32% in first Q26. For technology breakdown, our revenue below 40 nanometers still remain over 50% of the total shipment, and 28-22 is around 34%, slightly decline from the previous quarter. On page 13, there's some annual maintenance schedule or maintenance in the first quarter of 26, resulting in slight decline in available capacity in the first quarter of 26, and we will see the total available capacity to go back to the previous level in the second quarter of 26. On page 14 is our overall budget annual capex, which for the time being still stay around $1.5 billion US dollars. And the above is a summary of UMC's results for first quarter of 2026. Next, I would like to go to share our key messages. So in the first quarter, our wafer shipment increased 2.7% sequentially on a relatively strong growth in the consumer segment, lifting overall utilization rate to 79%, which is a continued improvement. Despite decline in blended ASP during the quarter, which I explained earlier, this is partially reflected higher 8-inch wafer shipment. And gross margin held firm at 29.2%. And demand for our 22 nanometer logic and specialty process continue to gain momentum, with 22 nanometer revenue now reach another record high and accounting for about 14% of total first quarter revenue. At the end of this year, over 50 customers will have complete tape-out on our 22 nanometer platform for a very diverse range of applications, including display driver ICs, network chips, and microcontrollers. We continue to invest in the next generation technology beyond 22 nanometer. Our 12 nanometer collaboration with our partner will provide customers with technology continuity as well as US-based manufacturing option. UMC also recently announced important development in the emerging business, including a strategic partnership to deploy thin film lithium neophate TFLN photonics for AI infrastructures. Going to second quarter, we expect strong wafer shipment growth across both 8-inch and 12-inch portfolios, supported by a strong rebound in the communication segment, as well as healthy demand across computer, consumer, and industrial markets. When the current memory supply shortage and ongoing conflict in the Middle East are creating certain headwinds and market volatilities, UMC continue to foresee resilient market demand. UMC will continue to monitor industry and macroeconomic development closely when prudently managing our business to cope with market dynamics amid evolving semiconductor landscape change. Now, let's move on to second quarter 2026 guidance. Our wafer shipment will increase by high single digits, and ASP in US dollar terms will increase by low single digit. Gross margin will be approximately 30%, and capacity utilization rate will be in the low 80% range. Our 2026 cash-based CapEx, as I mentioned earlier, so far will maintain around 1.5 billion budget. So that concludes my comments, and thank you all for your attention. Now we are ready for questions.
Yes, thank you, Mr. Liu. And ladies and gentlemen, we will now begin the question and answer session. If you have a question for any of today's speakers, please press star 1 on your telephone keypad and you will enter the queue. And after you are announced, please ask your question. If you find that your question has been answered before it is your turn to speak, then please press star 2 to cancel the question. Thank you. Now please press star 1 on your keypad if you would like to ask the question. Thank you. And our first question will be coming from Gokul Hariharan of JP Morgan. Go ahead, please.
Yeah, hi, Chitong. Thanks for taking my question. First of all, on the pricing environment,
our customers talking about the price increase to happen in the second half of 2026. So the blended ASP in second quarter increase is, yes, mainly from the mix improvement. And I would say 22 and 28 nanometer will be the main help for the blended ASP increase in second quarter. And when the first half of 26 were underway, we are seeing resilient demand across a broad range of applications, including communication, industrial, and consumer, and even the AI-related segments for us. This momentum is contributing to a sustained and increase in tight capacity environment across UMC's portfolio. And to support such demand, UMC continues to enhance manufacturing efficiency and invest in technology and capacity to ensure reliable, high-quality wafer supply. So this ongoing investment, together with increasing key cost drivers, including raw materials, energy, and logistics, are essential to sustain our long-term operational excellence and service commitment. In light of these factors, we will implement a wafer price adjustment in the second half of 2026, which will set up a more favorable position for the upcoming 2027. So the pricing reflects both the evolving supply and demand environment and the continued investment required to support our customers' growth. So pricing adjustment will be based on the factors including UMC's product mix, strategy, capacity agreement, and also the long-term partnership. So this pricing adjustment will be implemented. Hopefully, we will do our best in a very disciplined and sustainable manner to ensure our operational health and continuing to support our customer growth and long-term success.
Got it. Thanks, Chitong. So just to follow up on that, I think if I remember right, I think your letter was like 8 to 10% for 8-inch and 12-inch. Are we seeing further potential for increasing price? And what is the reception you're hearing from the customers that you've been in consultation with? I think is there broad acceptance of this price increase, or you see some some degree of pushback given some of the customers, the demand seems to be still pretty sluggish?
Yeah, one thing we don't want to do, and we never really did, is being an opportunist to take advantage of customers. So that's something we will never do. So our pricing strategy has always been anchored in the value, where we deliver our differentiated technology, diversified manufacturing footprint, optimization. This includes strong momentum in our 22-nanometer platform and reduction in commoditized segment exposures, and thereby strengthening UMC's long-term ASP profile. And I'm pretty sure we didn't really mention anything numerical in our letter to customers. So it will be based upon different segments, different technology, and our long-term partnership.
Got it. My second question on gross margin. So we had some improvement in utilization from like mid-70s to low 80s in Q2 based on your guidance. Gross margin still roughly hanging around 30% now. With this price increase, like how should we think about the gross margins? Are we likely to get back to like high 30s or 40% kind of levels that we were in back in the 21-22 kind of time frame, or that might require a much bigger improvement in utilization?
So unfortunately, we're still in the peak of our depreciation increase cycle. And I think in the previous quarter, we mentioned our depreciation curve will only pick up starting from next year. So we're still seeing quarter after quarter depreciation expenses. So if you ask me about EBITDA margin, I think I will be more comfortable talking about a better upside. But if you talk about gross margin or operating margin, we still under a lot of pressures from depreciation expenses increase, not to mention the recent geopolitical tension lead to raw material costs and the energy costs and logistic costs to increase. So our utilization rate will be in the low 80% range in Q2. However, the margin uplift from higher shipments will be largely offset by the higher depreciation and higher utility costs, like I mentioned. For the remainder of the 2026, the 12i in Singapore ramp up will start in meaningful terms in the second half of 2026, which will continue to carry higher depreciation expenses over the next several quarters. And of course, from UMC's side, we will continue to proactively deploy cost reduction efforts, including multi-sourcing, streamlining our operations, managing supply chain pricing, and drive automation transformation. So all these measures will help UMC to partially offset the cost headwinds and maintain our, or hopefully enhance our EBITDA margin.
Got it. Yeah, thanks, Chi-Tung. Thank you very much.
Thank you.
Next one, Charlie Chan, Morgan Stanley. Go ahead, please.
Thanks for taking my question. Thanks, Chi-Tung. And also, congratulations for a very strong guidance and outlook. But I do have some questions about the details, especially you comment about the communication segment is very strong. So may I know, is that coming from AI-related networking, or also the smartphone business, you're also seeing so-called a rebound? Thank you.
So first of all, communication was weaker in first quarter. So there will be a meaningful rebound in second quarter. And this will be driven, for UMC, will be driven by DDI, networking, FPGA, and ISP. So those segments will show stronger growth in the communication segment for the second quarter.
Okay. And if I may, I think the company also offering lots of new technology, no matter silicon photonic foundry service or your advanced packaging, right? So can management talk about your future plan for those advanced packaging capacity expansion and also potential revenue contribution in the coming 2 years?
So these are two questions. One is on packaging, one is on silicon photonics. So maybe David can help to answer the question.
Yes.
Okay.
As far as advanced packaging, as you're aware, we're seeing more engagements pick up on our advanced packaging solutions. And as you know, we're working with more than 10 customers on advanced packaging. And currently, we expect more than 35 new tape outs in 2026. And we foresee that revenue for advanced packaging next year will be significantly higher. And as of now, we're in production with our for an bridge die solution and discrete DTC, deep trench capacitor, with more products that will ramp up shortly.
May I know for the bridge die or DTC, are those working with other foundry partners? And is that part of the TSMC supply chain or on TSMC supply chain?
Yeah, we don't really comment on our partnership. But as you know, as we talked about last quarter, these things are picking up a little bit of steam.
Okay. So on top of that, do you need to further expand your so-called interposer capacity for that bridge die demand, or the current capacity is sufficient for that bridge die? So I'm assuming that silicon interposers more wafer capacity, whereas the bridge die, although more advanced, right? But it doesn't really come at much wafer capacity.
Yeah, as far as capacity planning for all of our new businesses, that will be aligned with our customers as well as market demand, and our ramp-up schedule will be aligned with the market outlook.
Okay. Thanks, David. Thanks, Chi-Tung.
So we're moving on to silicon photonics as well.
Oh, sure. Yes, please.
So for silicon photonics, we're now working with industry-leading customers that will help us ramp on silicon photonics. Additionally, preliminary data shows that our silicon photonic performance is on par or better than our peers. This is a result of our manufacturing excellence and also the fact that we use 12-inch equipment versus peers. In addition, we're on track to deliver our PDK 1.0 in 2027, which is based on the IMAC license. We are also enabling integration for our customer by evaluating hybrid bond, TSV, and chiplet integration.
Okay, got it. Thanks. I will be back to the queue. Thanks.
Thank you.
Next question, Sonny Lin, UBS. Go ahead, please.
Good afternoon. Thank you for taking my questions and congrats on the improving outlook. So my first question is to follow up on what you guided earlier this year. And so 3 months ago, you did guide better growth from second half of this year, driven by new products and market share expansion. And now Q2 is indeed pretty solid, but I wonder, how should you think about going to second half? Do you still hold the view that for this year, you should see even stronger growth going to second half of the year?
So we remain optimistic about our overall 2026 business outlook. In the first half, we are seeing resilient demand across a broad range of applications, such as communication, industrial, consumer, and AI-related sectors. So this momentum, we think, is continue to sustain an increasingly tight capacity environment across UMC's portfolio. So we expect this momentum to continue into second half, especially our 22-nanometer logic and embedded high-V platform, where we expect to grow in the high teen percentage range for those segments second half compared to first half. There's also another driver coming from our 8-inch recovery, which is progressively to deliver good growth year over year because of somewhat low base last year. So the stronger second half outlook support our expectation of a full year performance improvement. I think we still stick to UMC is going to outperform the growth of our addressable market in 2026. And so we're definitely, from UMC side, we committed to deliver a better performance and exceed last year's results. And hopefully this will be a turning point for UMC to broaden our addressable market. And this ASP uplift we talk about in the second half, together with our strategic investment for the upcoming 12-nanometer silicon photonic and advanced packaging, are all going to support UMC's sustainable long-term growth.
Thank you very much, Chi-Tung. So may I follow up on full-year outlook? And so I think several foundries have reported better outlook for 2026. And so one is for addressable market. Do you see some upside for low single-digit growth?
So I think the UMC addressable market show some incremental improvement, but not really significantly different. And overall market, I think, is definitely better if you include all the AI boom. So overall, the semiconductor industry is projected now grow by mid-teens in 2026. But UMC's addressable market may be slightly better, but still grow by the low single-digit percentage, which is, again, only slightly better than our last quarter's forecast.
No problem. Thank you. And my second question is, if we look at high level, there are lots of concerns around disconnect between consumer end market and mature foundry improvement. And so maybe if you could help us understand why for this year, although smartphone and PC end market are showing some weakness, broader mature foundry space, including UMC, get to see improving demand throughout the year, it seems. And then for UMC, how should we think about your server exposure? What would be the key products that you get to serve from server? And then from here, would you be able to benefit from server opportunity as well?
So our technology predominantly support customer addressing high-end market segments. Those end demand tend to be more resilient, even with recent memory tightness. Supply is typically prioritized for those high-end, high-value devices. As a matter of fact, our value-added technology, including 28, 22, high voltage, and RF-SOI, will help customers get more shares in the high-end smartphone segment in 2026. This will also help UMC navigate the headwinds from the communication/mobile segment. So when we remain attentive to the potential impact from either memory tightness, market tightness, or our current assessment is that any potential headwinds manageable. We will continue to monitor the situation closely with our customers. And the other factor is really UMC has been defocused on the commoditized segment. So any so-called generic commodity type of market segment, UMC will certainly try to scale down our exposures. And that will also help our overall position as a foundry. As for server, we don't really have a breakdown by the server end market, which we can maybe try to do that, but this is maybe 2 layers, 3 layers away from our market segment.
No problem. Thank you very much.
Thank you. Next question, House Liu, Bank of America. Go ahead, please.
Yes, thanks, Qidong and David, and congrats on the very good result and the guidance. I guess 2 questions from me. Started from utilization. You reported in first quarter 79% and will be up to 80% plus or minus range in second quarter. Would you be able to provide some of the breakdown between 8-inch versus 12-inch nodes? And also your expectation for second half this year, judging from your guidance just now that you think second half will be better than first half. Also separate between respectively for 8-inch and also 12-inch into second half. Thank you.
So it's not around 80%, it's above 80%. So it was definitely 80 something, and for the second quarter. And for Q2, we will see stronger growth coming from 22 and 28, relatively speaking. And 8-inch will continue with some rebound, but it's really but our Japanese operation is below corporate average, which is more in the 65 nanometer, 80 nanometer technologies. So for quarter 2, even though 8-inch will show some improvement, it's still slightly below corporate average. And 12-inch as a whole, still slightly above corporate average, but the gap is certainly narrowing.
Okay, got it. And second question is just regarding the pricing, right? You discussed about the like-for-like pricing, blended pricing outlook seems to be tracking better because of improving mix as well as improving utilization across the board. But I think 2 things. One is just on the pricing outlook for full year. I remember last time you mentioned it is going to be firm throughout this year. Would you be able to provide some update on that? And second thing is for the pricing on the like-for-like basis, would you be able to just share with us that your strategy on pricing? I understand there's a lot of macro factors a lot of moving factors in the macro environment that you might need to pass on the cost to your customers. But would you be able to share if there's any time in the history that your customers have been willing to or were willing to accept the price hike when your utilization is at around low 80% levels? So 2 questions here. First one is on the pricing outlook for full year. Any update on the versus the last time firm outlook? Second thing is just on your long-term view that's regarding the pricing environment right now versus your long-term trajectory of the business. That 80%, is this sufficient enough for your customers to accept a price hike across the board? Thank you.
So again, we really don't want to be perceived as opportunists to take advantage of our customers. So the pricing adjustment, coming back to our pricing strategy. So the ASP improvements are fundamentally anchored in our value proposition, and also the technology and manufacturing service, which is supported by a structured demand rather than short-term pricing tactics. So we are seeing customer market share gains, along with ongoing structure shift in the foundry landscape, generating durable demand for UMC. And we want to emphasize our differentiated technology and global footprint enable customers to strengthen their competitiveness across all segments, including AI, communication, consumer, and industrial automotive segments. So, like stated in our letter to customers, starting from the second half of 2026, we will implement disciplined pricing adjustment to mitigate some cost headwinds when maintaining customers' competitiveness. Meanwhile, hopefully more product mix optimization driven by a strong 22-nanometer demand will continue to drive ASP expansion. Even though the steady recovery in 8-inch loading may partially offset the ASP, blended ASP lift, our overall 8-inch recovery plan is progressing well, with several fabs running nearly 100%.
That's great. That's very clear. And I think just a quick follow-up on that is probably the firm pricing outlook for full year you guided last time. Is it still holding the same statement, or is it actually incrementally better? And on the EBITDA margins, you mentioned just now that you have a better target on that. Would you be able to quantify it? Thanks.
So if we take out the increased depreciation largely coming from the Singapore fab ramp with better loadings and potentially some pricing adjustment in the second half, we are confident if you take out the depreciation, the improved outlook should be able to offset some of the cost increase, especially in energy and logistics, etc. And our pricing outlook, certainly with the price increase letter to customers, is slightly better than the previous quarter.
Got it. Thank you so much, Qidong and David. I'll be back in the queue.
Thank you. Next one, Scarlett, BNP. Go ahead, please.
Hello, management. Congrats on the very good result and the guidance. My question is a follow-up to a previous one. So the consumer segment revenue seems very strong with a 4 percentage point increase in the product mix. So I wonder, is it because of the demand recovery or the pricing dynamic changes? And going forward into the second quarter and the full year, so how would you see the trend will be like? Thank you.
So consumers' growth in Q1 was mainly driven by Wi-Fi and DTV set-top box segments. For the second quarter, the growth will continue and will be driven by MCU, LCD controller, and power-related products.
Yes. Got it. Thank you very much.
Thank you. Next one, Laura Chen, Citi. Go ahead, please.
Yes, hi. Can you hear me clearly?
Yes.
Yes, hi. Thank you for taking my question and congrats for the good result. I'm just wondering that the progress with Intel's engagement, so we already have a good progress per management previous mentioned. Just wondering that for next year, if we start to see some like progress and breakthrough, how should we think about that? The potentially again increasing maybe R&D force or any impact on our like revenue and also expense?
So we cannot give revenue guidance now. I think the timing-wise, we are planning by later 2027, we will start to see initial commercial production. And in terms of investment, it's already happening, and that's also partially reflect in our increased R&D expenses. Maybe Michael can help me to comment more in some details.
Yes, this 12-nanometer project work with Intel continue to go well. We remain on schedule to deliver the PDK and associate IP to customers in 2026. And we anticipate that the product tape-out will commence in 2027, which will make a significant step toward the commercial deployment and future revenue growth. And UMC and Intel are working closely to ensure this successful tape-out and efficient ramp-up to mass production for the 12-nanometer customer product. So the application that for this 12-nanometer project will be including the DTV, Wi-Fi connectivity, and high-speed interface product.
Sure, thank you. I'm also wondering that since the expansion in the U.S. is probably one of the direction UMC is looking for, so I'm just wondering that following the 12-inch technology, any plan to further engage with the more advanced node with Intel?
So we have to stick to whatever we have, and to make it execute well and solid. So we cannot speculate the future. So our focus now is deliver the 12-nanometer platform to customers. So in the future, if anything makes sense for both partners as well as our customers, certainly we will consider to expand our collaboration to other derivative or technologies. But for the time being, the only focus is on 12-nanometer platform.
Okay, very clear. Thank you.
And next one, Felix Pan, KGI. Go ahead, please.
Hi, thank you for taking my question. I got two questions. So recently there's a lot of rumor talking about UMC in talk with the client about the potential memory foundry business. I know it's a little bit unlikely, and Chi-Tung also mentioned that you guys gonna scale down the commodity business, but I still want to some clarification how the company see the opportunity for the current strong memory demand, both DRAM or NOR. Is that possible? Will we do anything business related to the memory? That's my first question.
So again, we will not be able to comment on, of course, market speculation like this. But our strength is really in the differentiated specialty technology, which elevate our competitiveness to collaborate with customers. So we will pursue long-term and sustainable business opportunities, which demonstrate by our current comprehensive technology portfolio, such as embedded high-V, embedded non-volatile memory, BCD, RF SOI, etc., etc. And again, we will not do short-term opportunity chase. This is just not our way of managing business.
Okay, thank you. That's very clear. My second question regarding to the 8-inch tightness at the moment. So based on my understanding, this is primarily driven by the global leading foundries. They optimize their capacity, so they're exceeding some business for their 8-inch foundry. So primarily, I think this is supply driven, but also we see some incremental demand improvement. So is that possible to break down how you guys see the 8-inch tightness is more demand driven or supply tightness driven? And if I may have a follow up the Hess previous question, what's the 8-inch utilization rate in first quarter? Thanks.
We like to see this is really because of our competitiveness. So we always prepare ourselves to cope with industry dynamics. We welcome any opportunity to support our customers. So we view this landscape shift as an opportunity rather than a given. So we want to work hard to further optimize our product mix and gradually improve our performance. So it's very difficult to differentiate the two factors you mentioned. And again, we like to think the only thing we can control is our own competitiveness and our technology portfolio. So we will continue to work hard to invest, to broaden our technology portfolio and our service to our customers.
Okay. First quarter's utilization for 8-inch, if I may.
First quarter company-wide was 79%. And as I mentioned previously, it was 8-inch is below corporate average. But the situation, the delta, the improvement in the second quarter is higher for 8-inch. Although for second quarter, the 8-inch average loading still will be below corporate average.
Okay, thanks.
Thank you. Next one, Bruce Lu, Goldman Sachs. Go ahead, please.
Hi, thank you for taking my question. The question is regarding to the legacy node for 12-inch. You know, your competitor is talking about like exiting the market. What's the real situation for UMC is facing right now? You know, how much more business we can expect for the legacy node overflow, or in different ways that do we see the possibility to, kick off another round of capex especially in Singapore for like LTA with a customer for the potential new business?
Well, this is a very hypothetical question for us to answer. I mean, it's very difficult. I mean, it's somewhat similar to the fundamental of our 8-inch views. The only thing we can control is our own competitiveness and technology portfolio, and we think there's still plenty of upside there, no matter it's 8-inch or 12-inch legacy market segment. And of course, the market dynamic shift help us or have presented the opportunity, but it's really up to us to have the competitive edge to gain those opportunities. So those are the areas we are focusing right now. And if you talk about this advanced packaging, it's actually going to take some of the legacy part of the 12-inch capacity in our Singapore fab. And if the market dynamic continues with customer demand, certainly there's upside in terms of capacity for those 12-inch capacity in Singapore.
Or I should ask in different ways that earlier, so the previous investment is that, you only take LTA for the new capacity expansion for your 12-inch. Is that still the case for the future capacity expansion?
Well, we don't want to limit ourselves to the market opportunities. And back in 3-4 years ago, when the market presents the need and we need the customers to share the investment risk, that's where the LTA comes from. And going forward with all the new technology opportunities, such as silicon photonic and advanced packaging, we will continue to work closely with our customers, including share the risk of further investment. But will that be in the form of LTA or any other forms? We cannot comment because we are still in the early stage of the technology development. And the outlook is promising, but it's still a little bit too early to comment.
Understand. Thank you. So my second question is, can you comment a bit about 14 nanometers high voltage progress? Because I think we asked a question a couple of quarters ago when Jason answered that the driver IC might not need to go for 14 nanometer and beyond. But right now, TSMC is talking about like 14 nanometers high voltage process, right? Is that like the technology trend is getting clear that the driver IC will continue to migrate to the smaller geometry?
So I think disclaimer first, we don't comment on competitor. Okay.
No, I'm asking about the driver IC technology trend, right?
So we have a proven track record for driver IC, and for the current industry leading 22, 28 OLED display solution, UMC is always recognized as a global leader. So when customers are migrating to FinFET, and that's where our FinFET heavy solution will continue to provide better performance, lower leakage, and more die size saving. So again, it's all boiled down to our own competitiveness, and we do have the upcoming FinFET heavy solution as well.
I see. Thank you.
Thank you. Next one, Gokul Hariharan, JP Morgan. Go ahead, please.
Yeah, hi. So on the silicon photonics piece, could you talk a little bit more about the kind of engagements that UMC is making? Are these mostly for pure pluggable silicon photonics, or are you also engaging in some of the CPO-related projects? And given that you also have this PDK for the IMEC version of the technology coming out soon, how should we think about the ramp of this the photonics-related revenues over the next couple of years? Should we expect some meaningful progress next year, or do we have to wait for this IMEC-related IP to really be out there before we start to see some photonics-related revenues really kind of hitting the P&L?
Yeah, as far as the current silicon photonics, the key milestone is for us to release the PDK in 2027. It will be version 1.0, and obviously it's based on the IMEC license. And as far as the current designs, they're for PICs, they're basically pluggable solutions. But at the same token, we're also looking to enabling integration for customers by considering other, hybrid bonds, TSV solutions, or chiplet integrations that will help us be in a better position when CPO kind of takes place further down the road. But for now, it's pretty much all a lot of the PICs discussions and designs that were under customer engagement.
Okay, that's clear. Secondly, on the mature 12-inch nodes, I think 2022 still seems to be pretty strong in terms of utilization. Could you comment a little bit on 40 and 65-55 status, like how the utilization there, especially given you commented there is some slack in the Japan fab, which I think, if I remember right, was 55 and 40 nanometer, and any forward-looking comments on how that utilization is likely to get filled, given that you're also engaging some of the bridge IC projects?
Yeah, as far as for the 40 nanometer, 55 and 65 nanometer, short term, I think the revenue contribution for Q2 will be healthy. From a longer term perspective, we're confident on the business outlook for UMC's 40 nanometer and 55 and 65 nanometer technologies. So we are seeing longer term, there's going to be more designs, and that'll hopefully lift some of that long-term utilization rates.
Any products that are that you can call out here that are critical here to lift that utilization rate?
Well, I think right now they're under discussion on customer engagements, but once we've seen some real material uplift in UTR, we'll be more than happy to share them with you.
Okay, cool. Thank you.
Thank you. And ladies and gentlemen, in the interest of time, we're taking the last question. And the last one, Charlie Chan, Morgan Stanley. Go ahead, please, Charlie.
Oh, thanks for taking my follow-up questions. First question is really follow on the pricing strategy. As as a previous caller just mentioned that you did send some letters to customers. So I'm wondering what's the customer's reaction, meaning are they kind of very happy to accept the price hike because they can also pass through to customers, or given some market difficulty, so some customers have some pushback. So it would be much easier if you can management can give us some like preliminary second half price hike assumption. Thank you.
Well, I cannot speak for our customers. Again, we appreciate their long-term support, and just like our vendors, those raw material supplier and the energy supplier to UMC, it's going to be a win-win for the longer term. We need those to continue to provide efficient manufacturing and continuous investment. So I'm pretty sure our customer understand where it is coming from, but the key is really how UMC can help them to increase their competitiveness in the longer term and gain more shares. So I think that's the key message we want to deliver to our customer, and also we appreciate their long-term support.
Got it. Thanks. And also a follow-up question to Laura's question about the Intel partnership. I want to associate that to my previous question about your advanced packaging, especially you said bridge die and EDC, the deep trench capacitor. So is that the right way to think about that? Because Intel's EMIB right, also need those bridge die and DTC discrete components. Do you think is the right way to think about UMC would be a very important partner for Intel's EMIB or Intel's advanced packaging supply chain? Thank you.
So there's a lot of speculation here, and we cannot do that, and we have to respect our important partners. So again, our current focus is on 12 nanometer platform, nothing else. And there's important collaboration for both parties, and we have to make it work. And this is too important, especially for UMC. We are putting all the possible resources, try to make sure we deliver.
Yeah, but anyway, it sounds very reasonable because you have all the capability and technology that your key partner may want. But we look forward to your next updates. Thanks, Chi-Tung.
Thank you.
Thanks.
Thank you. And that concludes today's Q&A session. Now turn things over to UMC IR Manager for closing remarks. Go ahead, please.
Thank you, everyone, for joining us today. We appreciate your questions. As always, if you have any additional follow-up questions, please feel free to contact UMC at ir@umc.com. Have a good day.
Thank you. And ladies and gentlemen, that concludes our conference for 1Q26. Thank you for your participation in UMC's conference. There will be a webcast replay within 2 hours. Please visit www.umc.com under the Investors Events section. You may now disconnect. Thank you again. Goodbye.
「掌握分秒，累积财富。现在立即下载非凡新闻 APP， 财经快很准，随时随地掌握先机。